Right. So at this point, we are live now and our class is recording. So let's dive straight into the chat without wasting any further time. All right, guys. On this class, what I want to basically deal with is how to know the major demand zone to trade, right? How to mark out the major demand zone. That's the first thing we'll be looking at. Then how to catch your entry on that demand zone, right? Things to look out for your entry when you are entering a trade, what you are looking for, right? So as we know, we trade demand and demand and supply strategy, which is one of the strategies that allows you to trade the big boys market. So markets, like we all know, as we all know, market moves in a structural form, right? Market forms a higher high, higher low, higher high, higher low, higher highs. So hence market is doing this. We say we are in clear what? In a clear uptrend. So long as market is breaking structure to the upside, we say we are in what? In a clear what? Clear uptrend, because market is breaking structures to the upside. Remember the law of market structure, that market is not expected to take out the lows if market is in an uptrend, right? So you can see that the lows are intact. Market is not taking out the lows, rather market is taking out the what? The highs, which is what? A break of structure, right? Which is a break of structure. So we can see clearly in these charts how the market is forming higher highs, higher lows, higher highs, higher lows. So how do we know the particular zone to trade, the particular zone to look out for, right? If market, for instance, let's say market is in an uptrend, what are we to look out for? Which zone do we anticipate? Which zone do we look out for to trade this particular market? What we do is very simple, right? What do we do? In your higher time frame, remember we always use 4-hour time frame to mark out our major zone, or daily time frame, right? So let's assume this 4-hour time frame, right? On this 4-hour time frame, this is what you are seeing. You are seeing market pushing to the upside, pull back, push to the upside, pull back. Then all of a sudden, on this particular push, remember I always tell you that there must be an aggressive push before a structure will be taken out. You can't see weak candles take out structure, right? It must have an aggressive candle that will leave an imbalance, right? So here, for this market to take out this high, that means there is a zone that will be formed here, and that zone, above the zone, you will find an imbalance. There will be an imbalance. That imbalance is what will attract price back to this supply zone. This demand zone. That imbalance is what will attract price back to this zone before price will then continue back to the upside, right? So our major focus tonight is how do we know the right zone to trade? For instance, let's say market gives something like this, took out this high. So let's assume we have something like this on our chart. Where are we looking at to trade the right zone? Where do we mark out the major zone that we'll be anticipating price to come to? So here now, you can agree with me that this is a break of structure. This is a break of structure. So upon this break of structure, market pulled back, but we can see that there is still gap below, right? Which once there is still an imbalance here, once we still have an imbalance within this zone, know that price will definitely come back to fill that imbalance. Even if it didn't feel it at the current market price, at the current moment, market will still come back in the future to fill this imbalance. And coming to fill this imbalance, you agree with me that there must be a demand zone that is below that imbalance. Below that imbalance is a demand zone. Certainly, there must be a demand zone. There must, I didn't say there will, there must be a demand zone. The price will mitigate. Once price starts this supply demand zone, price mitigates. So right now, we now have candles form here, right? And breaks another structure to the upside. Breaks another structure to the upside. So somebody will now be like, do we mark out this demand zone here and follow it to the upside? How do we trade this market? So once price has put back to this level and price did not tap the imbalance, or price did not feel it, or price did not tap your demand zone, don't panic. Allow price to do whatever it wants to do here, right? And don't try to force trade. Just wait for price under your zone. Some people will be like, price has gone back, or like price is going back, or okay, let's say something like this might happen. Some people will be like, price is going back, or look at what price is doing, price is going back. Like once you see price is reverting back to your price want to go back, let me hop in, immediately you hop in, price will not come back, hit out your stop loss and still go back to your direction. So what do we do here now? You don't hop in on this particular spot. This is liquidity built up. What is liquidity? Liquidity is where people keep their stop loss, right? I think I explained this before. So here now, there are people that join this buy. There are people that join this buy from here. So they left their stop loss below here. So price pushed up, getting to this level. Some people started selling. So the power of sellers here overtook these buyers. I hope guys are unmuted. Let me check. So these sellers here overtook the people buying from this particular spot. So they pushed back price to this supply zone. Sorry, to this demand zone. So assuming you bought here, you could have bought at a very wrong zone, a very wrong place, a very wrong entry, right? What will price do? Price will come and take you out and still go back. That's why some of you will be like, I analyze market, price hit me out and still went in my direction. Is this thing? The place you enter the market is a wrong zone. So the zone you always look out for, like I always tell you, look out for a demand zone on 1 hour time frame or 4 hour time frame. Don't use 15 minutes zone. Works. I'm not saying it doesn't work. Even 5 minutes works, right? But to be on a safer side, look for 4 hour zone, 1 hour zone. They are more stronger than 15 minutes and 5 minutes. You understand? So at this particular spot, you don't hop inside the market. All you have to do, you wait patiently for price until price comes to fill this imbalance. Then after filling this imbalance, it will definitely mitigate your demand zone. Then start moving back to the upside, right? So this is how you mark out your correct zone. 1, you must see an imbalance. 2, that push must break structure, either to the upside or to the downside. 3, the candle must be aggressive. Don't go and see weak candles like these ones now. And you not say, yes, this push. And you not say this is your demand zone. This kind of candles, the candle must be aggressive. What you're looking for is something like this. Let me show you an example from the chart, right? Let me show you an example from the chart. Look at this. Here is a supply zone. This is a zone. Immediately price came to that price. You see how price, after price filled the imbalance here, price start on this supply zone. And you see what? You see aggressive drop. Pew! Aggressive drop. Right? This is the kind of push. This is the kind of move you want to see in the market. Right? Once you see this kind of move, what do? You mark out the last candle that caused this move. The last candle that caused this move. That is the last opposite candle. If it's an uptrend, the last bearish candle. If it's a downtrend, the last bullish candle. You mark it out. That place becomes your zone. So you'll be anticipating price to come back to that zone again before then dropping. I don't know if you guys are following. So That is as simple as that, right? As simple as that. So whenever you are trading or you are making analysis and you see market form things like this, know that market is building liquidity here. And this liquidity, market will take it out. Market will first take out the low side and continue to the uptrend. If it's a downtrend, it will first take out the sell side and continue to the major trend. So you have to know this, that market always moves by liquidity. Yes, market moves by liquidity. What do I mean by that? For example, if you are buying the market, market hits your stop loss. You have added buying pressure to me, that is buying. Then if market hits my stop loss, it have added more pressure to you that is selling. So each time market hits liquidity, it takes out people's stop loss and it increases the movement of the market to your opposite side. I don't know if you are getting it. So that's what is called liquidity. Any place you know that people's stop loss will be is liquidity, and price will be targeting to come and take out that liquidity. Price will be targeting to come and take it out. Once price takes it out, it will continue to the major trend of the market. So basically, if you understand this concept, you can never make any mistake in marking your zones, guys. You cannot make any mistake. Trust me, you can't make any mistake. Then let me also emphasize on market change of character, because some of you are still confused in breaking structure and change character. When market is pushing like this, push the upside, break structure, come down, break structure, come down, break structure. Then all of a sudden, price now comes back and takes out this low on a higher time frame. Price now comes back and takes out this low. Push back like this. Drop. So one thing you should notice is this. At this point here, we have BOS, break of structure. So at this point here, we have break of structure. You agree with me, right? Then at this point here, you also have a break of structure. Then all of a sudden, another thing happened. Market came and take out this low. This now becomes a change of character. See, forget all these grammars I now. I'm sorry for the people that doesn't hear Igbo. Forget all these grammars we speak, right? When I say change of character, that simply means market have changed direction. Like if it's buying, it have changed to selling now. If it's selling, it have changed to buying. Simple. Forget the grammar, change of character, break of structure, and all those stuff. Just try to understand this concept. When you understand the concept, the grammar is not a problem. You understand? So once market now does this, you see market take out this low, because the law of market structure says that once market is in an uptrend, it shouldn't take out the lows, but it should continue to take out the highs. Then all of a sudden, the market now break that law. That means market is now changing direction to the downside. And how to confirm that it's actually changing direction to the downside is going to leave a supply zone here. You will see an imbalance and you see a supply zone above that imbalance. What do? You mark out that supply zone. So once you mark out that supply zone, you wait for price to come to that zone. Once price comes to the zone, don't just go and hop in, right? So price may come to the zone for the first time, you leave it. You may not enter the trade. You wait for another break of structure here. Once this break of structure happens, definitely what will happen next? Price has to pull back to find the next supply zone that caused that break of structure, right? So what do you do at this spot now? You look for your supply zone, right? You look for your supply zone, you mark it out. You mark out your supply zone. You mark out your supply zone. Once you mark out your supply zone, you now go to remember this zone, you are marking it out on 4-hour time frame or 1-hour time frame. So once price comes up to that zone, what do? You go to 15 minutes time frame. On 15-minute time frame, you want to see a change of character. I will always emphasize this. You want to see markets do something like this. Another change of character of 15 minutes time frame. Another one. Remember, this one happened. This is a break of structure B. So you want to see this same change of character you saw here. You want to still see it here, but on a lower time frame, which is 15 minutes. So you want to see a change of character here. Why did I want you to see a change of character before you hop into this trade? If you are hopping in here, it can be that this break of structure here is a manipulation. So market may take you out and continue to the upside. But once you see a change of character on a lower time frame, that means the trend is actually going down. So once that change of character is spotted out, you go to 5 minutes or 3-minute time frame to look for another supply zone. Right? Please, if you don't understand, watch this video again and again. Look for another supply zone on 3 minutes or 5 minutes time frame. Once market breaks structure, like once you see a change of character on 15 minutes time frame in that your 4-hour zone, you go to 3 minutes. Sorry, once you see a change of, once market is on your zone of 4-hour, you go towards 15 minutes to look for a change of character. Once you see a change of character on 15 minutes and market is pulling back, you go to 5 minutes to mark out the supply or demand zone that is created on 5 minutes time frame. Once you mark it out, what do? That's where you now put your pending order. This is where you now take your trade. This is where you take your trade. Very simple, guys. Very simple. If you understand this concept, you use it to kill the market. I'm telling you the honest truth. One, it takes you not to risk more. You are risking very little and you are making more. So you target your take profit should be this low. This low should be your take profit. So if you check now, once price change character of 15 minutes, you are waiting for a pullback to 5 minutes supply zone. From there, market drops. From there, market drops. So understand these concepts, guys. So the same thing is applicable on a selling market. So let's say we are in a downtrend, market is doing a pullback, push, break structure to the downside, a pullback, break of structure to the downside, a pullback, a break of structure. Then all of a sudden you now see something like this. Market now comes and take out this low when it's not supposed to. Market now comes out and take it out. Then come back within a demand zone below here, right? And all of a sudden you see it push up again. So at this point, the same thing you did on a buying market, that's the same thing you are doing here. So here we have this is a break of structure. This is a break of structure to the downside. BOS. Then we have another break of structure here. Then we have another break of structure here. Then all of a sudden, market now comes and take out this low when it shouldn't. So market have gone astray. Market have broken our rule, which says the market is in a downtrend. Market is only permitted to break the lows and not the highs. So market is expected to be breaking structure to the downside, not breaking structure to the upside. So here market failed this rule. Then what do? Immediately you see that market have broken this low. What do? On that your 4-hour or 1-hour time frame, you look for the demand zone. You look for your imbalance and mark out your demand zone. Once you mark out that your demand zone, very simple. Go down to 15 minutes. Wait for price to come to your demand zone. Once price comes to your demand zone, you want to see something like this. Let's say price is coming down to your demand zone now. Price is coming to your demand zone. Then price came to your demand zone. All of a sudden, now see price push up. Take out this your low. Once you see price take out this low, takes out this low, spot the demand zone. If that demand zone is not on 15 minutes here, go to 5 minutes, find that demand zone, or 3 minutes. Once you see it, put your order there and target the next high here as your take profit, right? Target here as your take profit. So it's very simple. It's a very simple concept. It's a very simple concept, guys. Once you understand this, so here is your change of character on 15 minutes. Remember, this is on higher time frame. Immediately price comes there, you now go to 15 minutes. You want to see something like this. This is the picture you want to see. You want to see this change of character. Then you want to see a smaller demand zone on 5 minutes or 3 minutes. Then that's where you are taking your trade. Your limit order here. Target the next high as your take profit. Then your stop loss below that 3 minutes demand zone. Below the 3 minutes demand zone, just below it, like this. Like this, you are good to go, guys. Very simple like this. So what this helps you to do is, for example, if you are taking this trade here, my network. If you're taking so if you are taking this trade here, right here, if you open your position here and you are still targeting this same place and targeting as your TP, then your stop loss below this zone you agree with me that you can discover that you are risking more than I'm risking, even though we are targeting the same thing, right? Our target is the same, but look at what I'm risking. I'm risking just 9 pips. So you can see, you can agree with me that, okay, look at my risk to reward. My risk to reward is 11. Then my stop loss is 1:2. That's your risk to reward. Okay. Oh, sorry, guys. This is an upside down stuff. The long position, right? So, guys, that's okay. It's behaving. I think it should be a long position. Right. Sorry, my network is bridging. All right. So, what I want to see here is, oh, sorry, my network is bridging. All right. So, if you are taking this trade from here, you agree with me that though we are targeting the same take profits, right? But our risk to reward can never be the same, because I am risking more little and I am targeting to make more, while you are risking more and targeting to make less. If you check my risk to reward, you can see this one is to 11, while this one is to 5. That is to say, I will make more than you. So if I'm making $1,000 in this trade, if this trade hits my TP, I'm making 11K, right? That's last of the trade. If this trade hits your TP, you're making 5K. You see the difference now. So that's the difference between being aggressive and conservative. Alright, so it's 30 and I can drop now. Class is just 1 hour, so I'll be stop here for today, and I will drop this video on my Telegram channel so you can